This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Beginning today's show is Mark Dikeman, Kansas Farm Management Association Executive Director, reviewing the 2025 State Income Summary for Kansas agricultural operations. Kansas Farm Management Association economists Dillon Rapp, Glenn Conover, Lindsay Bryant, Jake Grinstead, Craig Althauser, and Clay Simons continue the show as they recap what 2024 farm income looked like for their association. Mike Brouk, K-State Dairy Specialist, ends the show by previewing the upcoming Kansas All Breeds Junior Dairy Show being held June 19th through the 21st in Salina, Kansas. That and more is coming up ahead. You're tuned in to Agriculture Today, and we start our show with the Kansas Farm Management Association Executive Director, Mark Dikeman. Mark, thanks for joining us today.
Thank you very much for having us.
Mark, today wanting to give a summary of what we saw for the state in 2024, and what's that overviewing picture?
So, Shelby, I think the overall picture, the overall story of net farm income or overall production with the KFMA farms in Kansas in 2024 is a story of high livestock incomes, decent yields throughout the state, or as a state average, decent yields, low crop prices, which is going to lead to lower crop incomes throughout the state. Within crop incomes, or within overall incomes, both government payments and crop insurance play a pretty significant factor in profitability for the KFMA farms. Net farm income statewide came in at $98,583, which is down just a little bit from 2023. Our updated 23 number is right at $100,600. So about a 2% decline in income overall. Maybe not the drop that we were anticipating, but there's a factor in there that I'll kind of get to in a bit that helped prop that income up. From a livestock standpoint, our value of farm production, which is our measure of gross revenue, was about $193,000. That's up slightly from the previous year. Overall value of farm production, again, our measure of gross income, about $829,000, which is actually slightly down from the previous year, which in 23 was about $835,000 of VFP. Total expenses ended up about $730,600 roughly, which again is down slightly. As a result, our incomes, even though VFP was down slightly, expenses also down slightly, we still ended up with a net farm income roughly equivalent to the previous year. The farms included in the KFMA Summary, overall net worth increased by about $56,000. So of that net farm income, they retained about $56,000. A little surprising was ending debt increased about $58,000. So a fairly sizable jump in overall debt. Maybe not surprising from the standpoint that really wasn't a great year from a net farm income standpoint, especially given the level of government payments and crop insurance that were received. Our debt to asset ratio, so a measure of solvency for a farm, if they were to sell off all assets and pay off all debt, what would the end result look like? Ending debt to asset ratio was about 0.22, which is very healthy level to be at. That's basically unchanged from 2023. However, liquidity, which is a measure of how someone might be able to sell their current assets, so grain inventories, market livestock, things like that, and pay off current debt, so debt due within 1 year, liquidity showed signs of weakening a little bit. Our current ratio, which is total current assets divided by current liabilities, it ended up at 2.7, which is still fairly healthy, but it is down from about 2.9 in the previous year. So again, some decline in that measure of liquidity.
When you see a decline in some of that liquidity, but you didn't really see a decline in that debt to asset ratio, is that something that long term you might see happen?
I think that decline in liquidity kind of indicates that we're going to see some cash flow issues coming into 2025. And we're already starting to notice that. We could recognize that towards the end of 24. We knew that cash would be tight as the 25 crop is planted, as inputs are purchased for that. Cash is a little tighter than it has been historically. And cash flow planning is more important for producers than it has been, especially looking back 2 and 3 years when profits were extremely high.
Mark, so as we're thinking about cash flow and kind of the finances of the farm, you mentioned government payments playing a really big role in agricultural operations for Kansas. And what are some numbers and how big a role do they play?
That's a very good question. And again, that was extremely important in 2024. I do want to point out that in 2024, the Emergency Commodity Assistance Program payment, Congress passed that. It was signed by the president as of the end of 2024. We could estimate at that time what those payments were going to be, and they were based on 2024 planted acres. So we accrued that payment, that ECAP payment, to 2024 accrual net farm income. So of the total government payment amount, which for 24 was $67,136 on average for KFMA farms, the ECAP payment was $44,000, $44,300 roughly. So a very sizable portion of total government payments was ECAP, and a very sizable portion of our net farm income was that accrued ECAP payment. So those payments weren't received by or haven't been received by producers until about now. So from a cash flow standpoint, that makes 2024 even more difficult, or the end of 24 even more difficult from a cash flow standpoint, because that cash for those payments had not been received yet. Overall, government payments were about 68% of our net farm income, so a very sizable portion. That's both livestock-related government payments and ECAP, as well as other ad hoc payments, other statutory program payments. Related to government payments, crop insurance was also very important in 24. Our net crop insurance proceeds, so that's indemnity payments minus premiums paid, so the net of those two statewide, that was about $24,600. So on average, producers received almost $25,000 more than what they paid in crop insurance premiums. That accounted for about 25% of our total net farm income. So you put together that net crop insurance and the government payments, that's about 93% of our net farm income for the year. Without those, absent those, net farm income looks pretty bleak in 24.
Is that amount of government payments and crop insurance really different from previous years?
That's a very good question. It has varied. I think we tend to live in a little bit different era when it comes to program payments. They are less predictable, more ad hoc type payments than, say, ARC and PLC, which are somewhat, I guess I would say, they're known, even though we can't predict them. We don't know what the payment amount is going to be. That is a fixed program going from year to year. Whereas as things like ECAP or payments we've seen in the past few years, PARP and ERC and ERP, those have been almost a one-time payment that's really helped to prop up farm incomes in recent years, or enhance farm income going back 3 and 4 years ago in the so-called COVID era.
Mark, any other important details you'd like to share with our farmers and ranchers?
I think one thing I'd like to mention that I'm sure everyone out there is aware of is the effect of interest rates on profitability. Every year we calculate what we refer to as an effective interest rate. So we take our total interest paid divided by average debt or average farm debt for the year. In 2023, that effective rate was about 4.4%. That jumped quite a bit in 2024. to 4.9%. So a fairly sizable increase in that effective interest rate, indicating that the increasing borrowing cost over the last few years is really impacting producers. The other thing I think I'd like to mention quick is that when we look at quartiles of profitability, so look at our highest profit farms versus the lowest profit farms, the top 25 versus the bottom 25, a considerable difference in net farm income, as to be expected there. Our highest profit quartile was an average net farm income of about $386,000, while lowest profit farms, an average loss of about $105,000. So a very big difference between those quartiles. And you would expect some difference, obviously, but the range between the two is probably more than what we would have expected. And I think that I'll kind of wrap up by saying it seems as though low-cost producers in 2024 really were the ones that made out well. And by looking at the highest profit quartile and the lowest profit quartile, crop production cost per crop acre for the highest quartile, their cost was about $360 an acre. The lowest quartile about $390, and crop machinery cost about $134 an acre for the highest profit farms, and about $146 an acre for the lowest profit. So costs seem to drive some of the differences or some of the variabilities in 2024.
Mark, I appreciate you taking the time to join us today.
Thank you very much, Shelby.
That was Kansas Farm Management Association Executive Director Mark Dikeman. We're cutting to a short break now on Agriculture Today, but we'll be right back. You're tuned back into Agriculture Today, and we continue our show talking with Kansas Farm Management Association economists to hear how things looked in 2024 for their area. We begin in southeast Kansas with Dillon Rapp. Dillon, how are things looking in your area?
Well, for 2024, we were kind of a mirror image of what Mark spoke about at the state level. Our crop incomes were lower than what we've been used to the last couple years, with the crop prices being lower. Our yields were pretty decent, maybe a little bit above what our long-run averages would be, but the low prices brought our incomes down on the crop side of things, especially with our input costs still being inflated from all the run-up in input prices we've seen the last few years. Livestock incomes were a bright spot, especially our cow-calf guys. With our backgrounders and finishers, they were buying those more expensive calves and then selling them at higher prices, so they were trading a lot more dollars, but when you look at the money they actually made, it wasn't that much different than what they did the year before. And our cow-calf guys did do better than what they did the previous year in some cases, but the increase in their overhead costs ate away a lot of the extra profits that could have been made on those higher-priced calves. Their feed costs were actually about the same as the year before, or even a little bit lower in some cases, but the increases in those overhead costs like insurance and real estate and property taxes and interest and repairs just ate away a lot of that extra money that could have been made on the cattle side of things. Kind of to switch gears back to the crop side of things, when we look at our crop enterprises to try to see what crops made more money than others, all four of our major crops that we look at, which would be corn, wheat, soybeans, and double crop soybeans. We do have some milo, but not as much. They all covered the variable cost that it takes to get the crop in and out of the field, but that didn't leave much left to put towards fixed costs like operator labor and depreciation and opportunity costs that we like to talk about as economists.
We continue in northwest Kansas with Glenn Conover. Glenn, how are things looking in that area?
Net farm income in our Northwest Association came in just under $140,000 for 2024, nearly half of what our 5-year average was. The year was certainly compounded by below average precipitation and obviously poor commodity prices outside of our livestock. I think our net farm income may seem maybe a bit surprising to some, but we certainly had highlights from what the cattle enterprises were able to do. On our wheat side, actually, we had average to above average wheat yields and returns there. And then we also had some aid in the form of government payments. So, for example, our crop cow herd farm type came in just over $60,000 of net farm income. A farm type, historically in our our neck of the woods that's maybe been a little less profitable than it has been this year and last year. Moving on to the crops, again, dryland wheat yielded right at our 5-year average, close to 45 bushels to the acre, was actually one of our best crop enterprises. When you look at the fall crops, dryland corn, we were 15 bushels under what our 5-year average was, coming in roughly at 45 bushels to the acre. Moving on to milo, there we were about 10 bushels under what our 5-year average was, coming in roughly 50 bushels the average. And surprisingly, our irrigated corn actually was right at or near our 5-year average of 170 bushels to the acre there. Of our $140,000 of net farm income, $122,000 was government payments. And of that $122,000, roughly $83,000 made up of the ECAP payments. This 90% of our net farm income was the highest percent we've had since 2020.
We continue in this state now in southwest Kansas with Lindsay Bryant. And Lindsay, how are things looking for you guys?
2024 was not an ideal year for a lot of producers in southwest Kansas. Our wheat got some rain early on, but then it shut off, causing poor yields. Fall crop yields, they yielded fairly well, especially dry milo. However, with the prices just being painfully low, it was still difficult. But on a better note, things were positive this year for our cattle producers. Value of livestock produced was up around $25,000, making up for 100% of the increase in our value of farm production. Net farm income came in at around $88,000. That was down a little bit from $102,000 last year, even with that rise in cattle income. Of that net farm income, $131,000 was from government payments and net crop insurance. We did accrue that ECAP in those government payments, and that was around $50,000 of that number. So without those, we would have come in at a net farm loss of about $43,000. Average family living, including income tax, was around $100,000. So without some off-farm income, this would create a deficit at that $88,000 in net farm income, which can be detrimental to some operations in a hurry and would be unfathomable without the crop insurance and government payments.
Next, we have Jake Grinstead from North Central Kansas. Jake, how are things in 2024 for North Central Kansas?
If we take a look at net farm income, we outperformed 2023 just slightly. The net farm income across our association was $101,885. In 23, it was $83,724. But our net income for this year is actually really close to our 10-year moving average. That's still fairly depressed from 20 and 21, which were some really good years in recent memory. When we look at our net farm incomes across the association, there was quite a bit of variability among producers. So in really general terms, our operating expenses were fairly similar, but the value of gross revenue, the value of farm production was more, and that was what made the difference. Mark did note that we made the decision to accrue those ECAP payments made this year back into 24's income. So for my members listening and thinking, well, I felt kind of a cash flow pinch at the start of the year, that would be why. For the most part, yields looked really competitive with historical data. So as a general rule, I think our increase in gross revenue was more challenged by prices than anything, and there were some price opportunities that we wish could have been better. That said, there was quite a bit of variability too. Cattle were a bright spot, like everywhere else, and there were a lot of opportunities for dollars there. But if we have a major concern for next year, I think it's liquidity. So working capital is becoming a real concern.
We move on now to Northeast Kansas with Craig Althauser. Craig, how are things in Northeast Kansas?
Well, 2024 was kind of a mixed bag for us in Northeast Kansas. Our the net accrual farm income was just over $73,000 per farm, so it was below the statewide average. And we've had a run prior to last year of several really good to very good, good to great, really almost years of 5 or 6 years prior to that. So last year was a turn of sorts in Northeast Kansas. We were pretty thankful that we received the ECAP payments here just recently that we've accrued as part of this 2024 income, which is contributing to that $73,000 figure. And without that accrued back, of course, last year would have looked even a little tougher. Maybe the most interesting thing, and not necessarily positive, but interesting, was that we saw a very broad distribution of these incomes per farm across all of our subset of farms, and much more so than usual. Of course, the cattle producers were a really bright spot. There was a lot of profit there. But I think what we're looking for is maybe if there are some tougher times ahead, the canary in the coal mine. And so we look at the impact last year had on the balance sheets. And we still have strong balance sheets, they deteriorated just a little bit. So we saw debt to asset ratios creep up from 0.21 to 0.22. Still a very good number, but we're seeing some chinks in the armor of those solid balance sheets that we've built over a few prior years of really good income. So all in all, not what we really want and need long term, but it surely wasn't just awful either. So we're hoping for a turnaround and some improvements coming up.
And finally, we wrap up with Clay Simons from South Central Kansas. Clay, how are things in 2024 for you guys?
Well, in general, it's a similar story to everywhere else in the state. Our net farm income was $68,989, which is very similar to the $70,000 income that we had the previous year. But the story is entirely different. $69,000 of our income was government payments. So if we would have had no government payments, we would have had a loss. Then we had another $46,000 in crop insurance on top of that. And so without those two things, we would have had a, $47,000 loss. And then, I guess the bright spot right now, if you can call it that, our ECAP payments were 63% of our government payments, which was just under $45,000. We've been watching cash flow kind of evaporate over the last 2 or 3 years, and folks have been feeling the pinch. And so to a certain degree, these ECAP payments that are just starting to show up right now for members are kind of like pennies from heaven that they can sure use to, help with some operating debt and some cash flow and buy some inputs. The other thing that really does kind of stand out is just the large variability in the incomes across the association. Our high 25% of farms, they were right around $283,000 net farm income, but our low 25 was right at an $81,000 loss, which is as big a swing as I can remember in the last 20 years of doing this. That's $360,000 of difference. But even more interesting is when you look at that low 25%, a lot of times it's your smaller operations, and that's not the case this year. In that low 25%, the average farm size was about 2,000 acres.
Those were Kansas Farm Management Association economists discussing what things look like in their association for 2024. We're cutting to a short break now on Agriculture Today, but we'll be right back.
Welcome back, and thanks for joining us on Agriculture Today. Along with Shelby Varner, I'm Jeff Wickman. We end today's program with this week's Milk Lines. The 60th Annual Kansas All Breeds Junior Dairy Show is being held June 19th through the 21st in Salina. K-State Dairy Specialist Mike Brouk provides a general overview of this year's event and explains how youth can get registered for the dairy show.
Today I'd like to visit with our Kansas dairy audience about the Kansas All Breeds Junior Dairy Show. This year will be the 60th rendition of the show. We meet in Salina on June 19, 20, and 21 for this important youth event. This event is open for all youth that are enrolled in 4-H and the Dairy Project, FFA members, as well as all members of junior breed associations associated with the dairy industry. It's a really exciting time. On Thursday, we come in and we get the animals in place Thursday evening, and then the events really start on Friday. So on Friday, we host a dairy judging contest, and then we have a quiz bowl and a dairy skill-a-thon in the afternoon, and that's followed by the exhibitor's banquet that evening. On Saturday is all about showing, so we have a start with a fitting and showing contest, and then in the morning with the breed judging, where students will be showing the animals in their different breed classes. It's an exciting event for many young people across the state, and it does provide an opportunity to bring the dairy industry together in this youth event. Again, this event is held June 19, 20, and 21st. If you're interested in additional information or would like to register for the event, you can find additional information at the Junior Dairy Show website. That's located on the K-State Animal Science website. So if you just use your web browser and you search for Kansas Junior Dairy Show, you should get to the right place to get additional information about the events. I want to remind everyone that if you want to participate in the events on Friday, that would be the judging contest, the quiz bowl, and the skill-a-thon, you do not have to show animals on Saturday. So it is possible to come in for the events on Friday and not bring animals for the show on Saturday. If you need additional information, again, go to the Animal Science website and look for Kansas Junior Dairy Show, or you can also contact us at our offices here in Manhattan, area code 785-532-1281. Talk to Mr. Kevin Snell, or you can send Kevin an email at kpsnell@ksu.edu. This is Mike Brouk with K-State Research and Extension, encouraging all of our dairy youth across the state to plan on attending the Kansas Junior Dairy Show held June 19th, 20th, and 21st in Salina, Kansas.
Thanks, Mike. And while we have a moment, K-State beef production specialist Emma Briggs says that establishing a uniform calf crop can lead to benefits for the cow's health, the calf's growth, and the farmer's finances. She discusses the positive effects of a consistently timed calving season.
Having a really tight calving season can be really helpful. When we talk about tight calving seasons, we're really looking at something between 45 to 90 days, depending on what works well for an individual producer operation. This is going to create a more uniform calf crop in terms of age and weight at weaning to be able to market those calves in a very specific manner. It's also going to simplify health protocols, vaccination strategies, castration times, and it's also going to allow for a more productive and steady recovery for that cow as we enter into the new breeding season and improving an overall fertility on a herd-wide basis.
Briggs says that working on the length of a calving season can potentially lead to higher profitability. To learn more, go to www.ksubeef.org. That's www.ksubeef.org. And that'll do it for this edition of Agriculture Today. For Shelby Varner, I'm Jeff Wickman. This is the K-State Radio Network.